Hello, everybody. Thanks so much for hopping on live with us today. We're going to have a really big group, so we are going to give folks a couple minutes to jump into the room. My name is Andy. I will be your webinar host today. While all of you all are coming in, I'd love to hear in the chat your business. So what type of business you have and where you are zooming in from. So I'm going to repeat myself because I know that we're just have a big flow of people coming in right now. My name's Andy. We're going to get started in about 2 minutes. And while we wait, I would love to hear from all of you in the chat about where you're zooming in from and what type of business you have. All right, so we have Leslie from North Carolina, who's a coaching consultant. We have W. Harris, who is in Georgia with property investments. Andrea, it's moving so fast, from New York City, who is a real estate agent. Kate is also from, oh, sorry, Andrea, you're from South Carolina. It's moving so fast, you all. Kate is from New York City, who's an event planner. Amanda has a private therapy practice in North Carolina. Michelle, insurance brokerage in Branson, Minnesota, I think MO is, Missouri. Sorry, y'all. I know a lot about taxes, not about a lot about state abbreviations. I'm going to just scan down because there's so many in here. We have Mario from Houston, legal consulting. Maria from Texas, translation business. We got a couple Texas. Oh, another one. Doinita from Texas, home remodeling. So gonna keep scrolling. Raja from Florida in IT consulting. Angela from New York City is a wedding photographer. Michelle is also from New York, a realtor. I just like pick these out randomly. Nadia, also from New York, MediSpa. All right, I got to get out of the New York. So I love you all, New York, but we got to get Ashley's in Texas as a private practice. JT is a pilot from Texas. A lot of Texas and New Yorkers here today. All right, we got a Northern California one. Joy is a psychotherapist, private practice in Northern California. We have Mark, who's in repair and fabrication from Massachusetts. And we have Maritza from Oceanside, California, is a business consultant. Oh my gosh, thank you all so much for telling me a little bit about yourself. I am going to switch over to our slides and we're going to get started because we have a lot to chat with each other about today. So my slides are up. Oops. They're moving slow today. Okay, so thank you again so much for joining. This is a quick overview of what we're going to cover today. We're going to first start talking about self-employed taxes 101. Then we're going to go into LLC and S Corp basics. We'll talk more about LLCs and S Corps and the differences between the two. We'll talk a bit more about how to choose the right structure for you, and then we'll talk about how to get started, and we'll end with our giveaway for live attendees. We're going to give away a $50 Amazon gift card towards the end of the webinar, as well as a live Q&A. On the live Q&A piece, please put your questions in the Q&A box and not the chat. At the end of the webinar, do not look at the chat. There's often a lot of activity in there. It's very difficult for me to track questions. So please put your questions in the Q&A because I can track them. I can mark which ones I've answered. Your question will be answered if it's in the Q&A. Your question will not be answered if it's in the chat. And before we jump in any further, just a quick note from our legal team. This webinar is for educational purposes only. Nothing in this webinar should be considered legal or tax advice. And please always consider consulting a tax professional if you need legal or tax advice about your business. Now, I mentioned when all of you all were coming into the Zoom room that my name was Andy Smiles. I'm the director of content here at Collective. And I did want to give you a quick overview about who is hosting this webinar. So Collective is the first all-in-one online financial platform designed for self-employed people, which may sound a little vague. Like, what does that really mean? So your money when you're self-employed can look a lot like this, which is basically that there's a lot of stuff that you got to keep track of when you're self-employed. Everything from your bookkeeping to your payroll to setting up your business, which is why you all are here today, to doing your taxes and even keeping up with those quarterly estimated taxes. There's a lot to do when you're trying to focus on running your business. And when you need to make a financial decision, or when you're in the middle of tax season like we are right now, things get even more complicated because you realize that all of these different things you have to keep up with in the financial back end of your business actually are connected to each other. And this is when you can start to feel overwhelmed or disorganized, or like things are slipping through the cracks. So when we say that Collective is the first all-in-one financial platform designed for self-employed people, what we mean is that we bring all of these different parts of your business finances into a single platform. But we are not just technology. You have a team of real-life human beings working behind the scenes doing the heavy lifting for you, like your taxes, your accounting, your bookkeeping, so on and so forth. But with the platform to house everything in one place. So you have one login and you can do all of this in one place. So that's a little bit about Collective. We'll talk more about what we do at the end of today's webinar. But I do want to get to know everybody here a little bit better. So Sarah, who is helping me out with the webinar today, is going to launch a poll. And I would love to hear from you. What are you struggling with most right now? So we'll get that poll up. Is it setting up your LLC or S Corp, doing your taxes? We are in tax season after all. Your bookkeeping, finding ongoing financial advice, or retirement and benefits planning. So I'll take a sip of tea, rest my voice for a moment while you all chime in. Okay, let's close out the poll and see what the people have to say. All right, 71% of you said setting up your LLC or S Corp. You are in the right place. You're going to get so much information about this today. 48% said taxes, 20% said bookkeeping, 29% finding ongoing financial advice, and 22% retirements and benefits planning. The good news is that we are going to actually touch on every single one of these topics today. So whatever you voted on, you are going to learn something related to your biggest struggle today. And with that, let's talk about taxes, and in specifically the US tax system. So I know you are here to learn about LLCs and S Corps, but in order to understand LLCs and S Corps, we need to start with the basics of the taxes that self-employed people pay. So in the United States, there are two taxes self-employed people pay, and the first tax is income tax. Now, income tax is what people generally think of when they hear the word taxes or April 15th, because pretty much everyone in the US with earned income pays income taxes. And in the United States, you are going to pay between 0 and 37% in income tax, and that's going to be based on your tax bracket. So you may have heard at some point somebody say to you, oh, you're in the 22% tax bracket, but you might not really know what that means for your tax bill. So income tax is a kind of a neat tax because it is not a flat rate. Instead, your tax bracket is just the maximum tax that you will pay. How our tax system works in the US is it's a progressive tax system, which means that the first chunk of money that you earn will be taxed at a certain percentage, let's say 10%. The next chunk of money you earn will be taxed at another percentage, let's say 15. The next chunk, 20, and then the final chunk where you cap out as how much percentage you'll pay, which is your tax bracket, will be the last chunk of money you earn. So if you are in the 22% tax bracket, does not mean you're paying 22% on all the income that you earn. It actually is going to tier or progress up. And what you pay is an average of all of those different percentages. Now, the next tax that self-employed people pay is called self-employment tax. And self-employment tax is different from income tax for two reasons. First, it is a tax that is special to self-employed people. And second, it is a flat rate of 15.3%. So I just talked a lot about how income tax isn't a flat rate, but self-employment tax is. And your self-employment tax pays into your Social Security and your Medicare. So that's what you're paying into when you pay self-employment tax. Now, employees also pay into their Social Security and their Medicare, but there's a slight difference here, which is that when you are an employee, your employer is going to pay half of these taxes. So you are still getting 15.3% of what you earn into your Social Security and Medicare buckets, but your employer pays for half of that bill, and then you pay for the other half via withholdings from your paycheck. But when you are self-employed, the word self is in there. You are the only one, which means you are responsible for both halves. And this is why, if you come from a more traditional W-2 job with a paycheck, like being an employee somewhere, and now you've started a business and you're like, wow, why is my bill feel like it's so much more, or that's doubled? Well, when it comes to self-employment tax, it has doubled. Now, I want to demonstrate this another way because that slide had percentages on it, but let's talk about actual money. So here's an example of somebody who would owe $15,000 in Social Security and Medicare taxes. Now, if they were an employee, they would only personally be on the hook for $7,500 of that. Their employer is going to pay the other $7,500. But when they are self-employed, they pay that entire $15,000 on their own. And this is why self-employment tax can feel so expensive. Okay, so those are the taxes that you pay as a self-employed person. Now let's talk about how you're taxed as a single self-employed person. Here at the top, we have our revenue, which is just the money you make before expenses and paying taxes. So it's just what you make from selling your goods and service. And then we have our tax deductions or our expenses. What we're going to do is we're going to take our revenue and we're going to subtract our expenses from that. And what's left is called net income. Now, if your net income is a positive number, that is called profit, and it means that you made more money than you spent. If your net income is a negative number, that is what we call a loss, and you spent more money than you made. When you are self-employed, in either case, whether you have a profit or a loss, it is going to pass or flow through to your owner tax return. Now, this is important because what's really cool about this is that when you are self-employed, unlike a C Corp, like a corporate structure, your business doesn't have to pay taxes at the corporate level. Instead, the profit or loss is going to pass or flow through to your personal tax return, and you are going to pay self-employment tax, that 15.3% that we talked about earlier on your business profits, and then income tax. Now, income tax is not as straightforward. You will pay income tax on your business profits plus any other income you have in your life. So if your business is a side hustle and you have another W-2 job or an employee job, you're going to combine those incomes. Or maybe you file your taxes jointly with somebody, you are going to combine your incomes. Then you will subtract your personal adjustments and the standard or deduction or itemized deduction, depending on what you take. What's left is called your personal taxable income, and that is what income tax is assessed on. So I am not showing you all of this information about income tax in order to get you to calculate your own income tax. It's more to show you that there's a lot of nuance in everybody's individual tax situation. And that is why it's not easy for tax professionals to just throw out a number to tell you how much you're going to owe in taxes without knowing about your business. The other key takeaway of this slide is that you pay both of these taxes. So your tax bill is a combination of self-employment tax plus income tax. Okay, so you came to this webinar today to learn about LLCs and S Corps, and I'm talking to you about taxes. So why does this matter, and why am I starting off with this? It matters because how your tax is going to differ if you're an LLC and an S Corp. And now we're going to start talking about those differences. So we're going to start with what's an LLC? And before we talk about an LLC itself, we need to talk about the concept of a legal structure. So a legal structure, which you may also hear called a business entity, is a process in which you go through where you go to your state and you organize your business under your state as its own separate entity. So an LLC and a corporation are both examples of legal structures. A legal structure is formed with the state. It requires filing formation documents and paperwork with your state. And often when you have a legal structure like an LLC, you are going to have to file ongoing state reports talking about who manages your business, and you may even have to pay annual or biennial fees. And all of this is typically done with the Secretary of State or an equivalent agency that is not your taxing authority. So when you have a legal structure, you will have more paperwork that you're responsible for, and you'll be interacting with different types of departments in your state. Now, you may be wondering, what if I don't have a legal structure? I've never done all that. Something that comes up a lot in these webinars that people ask, if I didn't do that, am I like legal to run my business? If you don't have a legal structure, you are what's called a sole proprietor, and there's nothing you need to do. If you have self-employment earnings, by default, you are automatically a sole proprietor. And when you are a sole proprietor, under the eyes of the law, legally, you and your business are one. This includes your assets. So even if you have your business bank account and your personal bank account, and everything is separate, we're really talking about the eyes of the law. And under the eyes of the law, there is no separation between your personal and your business assets. So you are all one. And your business profits as a sole proprietor is going to pass through to you, the individual. That flow chart I showed you earlier about how you're taxed, that's the tax structure for a sole proprietor. Now, the benefit of a sole proprietor is that you don't need to file an annual return with your state, right? There's a little bit less paperwork involved. Now, let's talk about LLCs. As we've already mentioned, an LLC is a type of legal structure, which means you are going to have to register with your state and do ongoing state reporting and maybe even pay annual state fees. Now, one of the primary benefits of the LLC is that it provides limited liability protection. What this means is, earlier, remember I said as a sole proprietor, you and your business are considered one under the eyes of the law. As an LLC, you and your business are considered separate entities, which means that your personal assets are going to be protected from business lawsuits and creditors. So what the LLC does is it creates this legal shield between your business and your personal assets. And in most cases, if your business is sued, your personal assets are going to be protected. What are personal assets? Your house, your car, your personal savings, your personal retirement, your personal investments. All of those things become shielded from any negative business impacts. That's a very compelling reason to start an LLC. And frankly, it's the reason that a lot of people look into starting an LLC. But there are a few other benefits to an LLC. For example, it can lend credibility to your business. Prior to working at Collective, I was a small business financial consultant, and I worked a lot with one-on-one clients. And a lot of my clients had to start LLCs if they wanted to secure large corporate clients. So often there is a type of client who does not want to contract with an individual or a sole proprietor. They want to contract with a business entity. So it can open up more work for you and a different set of clients. Also, an LLC allows for multiple members, which is just LLC speak for owners. So if you want to own your business with somebody else, an LLC is going to enable you to do that. Now, just like sole proprietors, the business profits from an LLC are going to pass or flow through to the owner. And there's a reason for that. Because an LLC is taxed exactly the same way as a sole proprietorship. So that flow chart I showed you earlier about how you're taxed, that's the tax structure for a sole proprietor and an LLC. And this is a big mistake that people make. They think that they're going to start an LLC and their tax situation is going to change. An LLC does not change your tax situation by default, but you can ask the IRS to change the way that you're taxed. And we're going to talk about that in just a minute. But before we do, let's go over the differences between a sole proprietor and an LLC. So the LLC requires registration with your state, while the sole proprietorship doesn't. Remember, that just happens by default that you become a sole proprietor. And that LLC creates that wonderful legal shield between your business and your personal assets. And you can have multiple owners with the LLC. You can't do that as a sole proprietorship because the word sole is in it, right? Both the LLC and the sole proprietorship, that business profit is going to pass through to you and you will pay self-employment tax. Remember that 15.3% that we talked about on your business profits. Now, there's one more really cool thing that an LLC can do, which a sole proprietor cannot, which is change the way it's taxed. This is what we call tax flexibility. And this is going to bring us to what's in S Corp. Because fun fact, an S Corp is not a legal structure. An S Corp is a tax election for your legal structure, in this case, for your LLC. So I know that the name of this webinar is LLC versus S Corp. And I know that we often talk about S Corps in this way as if they're their own entity. We say, I am an S Corp, you're going to form an S Corp, you're going to become an S Corp. But really, on the technical level, what's happening is that you are an LLC that is taxed as an S Corp. So if we were going to be very technically accurate about the name of this webinar, it would be called LLC tax as a sole proprietor versus LLC tax as an S Corp. We don't do that because none of you would be here today if that was the name of the webinar. You would just zone out. So we want to use your language, of course, but also reiterate that it is not an either or situation. It is a both and. You are an LLC as your legal structure, and then you're going to layer on top of that the S Corp tax election. And so if you are an LLC and you decide, I don't like being taxed as a sole proprietorship, you can ask the IRS to change how you're taxed. Okay, so why would you ask the IRS to change your tax treatment to an S Corp? What would be the benefit of that? Well, one of the primary benefits of S Corp taxation is that S Corp owners don't pay self-employment tax on their business profits. That's very exciting. So remember, that's at 15.3%, that flat rate. What happens instead is that your S Corp creates an employee and employee relationship between you and your entity. And you're required to pay yourself what's called reasonable compensation through payroll. Basically, you as the owner are going to become an employee of your business, and your business is going to become an employer of you. It's all very meta, I know. And your business is going to pay you a salary through payroll, and that salary becomes a tax-deductible expense of your business. Your employee wages are treated like anyone else's employee wages, which means that they are subject to payroll tax, which is 15.3%. Yes, it's the same percentage of self-employment tax, and it does the exact same thing. Pays into your Social Security and your Medicare. But half of the taxes are going to be withheld from your paycheck, and the other half become an expense for the S Corp. So you get another nice little tax deduction there. And you are only paying that 15.3% on your owner's salary, not your entire profits. Okay, so we're going to walk through the tax structure of an S Corp so you can see how these savings work. Before we do, this is a quick refresher. We're not going to go back over it. It's just to kind of jog your memory of like how it works when you're a sole proprietor or LLC. Now let's talk about how it works when you're an S Corp. Here at the top, we have our S Corp revenue. Remember, this is the money you earn before expenses and taxes. Then we have our salary, our owner's salary, and our expenses. We are going to take our S Corp revenue and our salary, and we're only going to pay payroll taxes on that salary. So it's at 15.3%. What happens next is we take the revenue, we subtract the expenses, we subtract the salary, because remember, that's an expense of your business now. We subtract half of those payroll taxes, that also gets to be an expense of your business. And what's left is the S Corp profit or loss. And that, again, is going to pass or flow through to your owner tax return. So once again, you are benefiting from not having to pay taxes on the corporate level, and you're avoiding double taxation. So your profit or loss passes through to your owner tax return, as well as your W-2 salary. That is what you pay income tax on. So I know there's a lot going on here. The big takeaway is that at one point we had 2 boxes at the bottom. Now we only have 1. And let's look at how only having 1 box at the bottom saves you money in taxes. Here's an example of somebody who is being taxed as a sole proprietor or a single member LLC, and an S Corp. And let's say this person has $160,000 in profits. Remember, profit is after expenses. Well, if they're the S Corp, they're going to pay themselves their owner wage, that reasonable compensation, and let's say it's about $60,000. Let's look at the amount of money that is subject to those 15.3% taxes. Well, for the sole proprietor, a single member LLC, remember, who's not being taxed as an S Corp, because they're still an S Corp, or an S Corp is still an LLC, $160,000 is subject to that 15.3% tax. For the S Corp, only $60,000 is subject to that tax. So then it just becomes a simple exercise in math. If we start looking at how much with less money subject to this tax, there's just less tax, right? In this example, it's a $15,000 difference. So that's pretty serious tax savings. But what I love about this chart are the last two rows. So let's talk about the pass-through profit. Remember, when you're a sole proprietor or a single member LLC that's not taxed as an S Corp, everything's just passing through to you. So that $160K in profit just flows right on through to your tax return. With the S Corp, it also is going to pass through to you. But why is it a little bit less? Well, it's $60,000 less because your owner wage is $60,000. You're going to write that off, and that's going to become lower your profits. But then the last line, what's going on here? Why does it bump back up to $160,000? Because you are still earning that $60,000 in personal income. So the TLDR of it all is that you're saving money in taxes, but you're also earning about the same in your personal income. Okay, so this is the part where we get lots of questions about employees, being an employee of your own business, and reasonable compensation. First, why do I keep saying reasonable compensation? Because that is the word that the IRS uses. They call it reasonable compensation. And the IRS doesn't give you a reasonable compensation wage or a range or formula. They say it is a facts and circumstances argument, which means that you cannot just go to the IRS website and type in marketing consultant in New York City, average salary for S Corp. It's not going to give you that. So instead, you really have to think about your facts and circumstances. And it is really important here to work with a tax professional or collective to set your reasonable compensation. Why? Because your salary is a tax strategy. It is not what you think would be cool to get paid from your business. It is not like a vision board, I want to get this type of paycheck from my business. It isn't even what you actually need to live off of. There are other ways to get money out of your business to supplement that. Your salary is a tax strategy, which is why you want to work with a tax professional. You want to ensure that you are striking a balance between tax savings, but also being within the rules of the IRS. I love this visual here because I think this does an amazing job of showcasing what you're trying to balance. Here's this little slider here. We were to slide it all the way up and pay ourselves our entire expected profit. Well, your tax savings would go through the roof, or your defensibility to the IRS would go through the roof, but you would have no tax savings. Why? Because this is the exact same structure as being a sole proprietorship. Now, if we were to slide this all the way down and pay ourselves $0, well, you'd have tons of tax savings, but the IRS would not be very happy with you. So you're really trying to find that range of how do I leverage this tax structure that is made available to small businesses like you. It's here for a reason. It's here for people like you, but also stay within the rules and stay within compliance. So there are a few additional benefits to the S Corp that I want to talk a little bit about. Now, first, there are just more tax deductions. We've already talked about this, right? Your salary becomes a tax deduction. Half of your payroll taxes become a tax deduction. With more tax deductions, this is going to lower your profits and save on all of your taxes. There are also higher retirement contribution limits. Now, when you are an S Corp, you can start what's called a solo 401k. And you can contribute into this retirement account as an employee and as an employer. and your employer contributions become a tax deduction of your business. So that kind of circles back to number one. But where the higher contribution limits come from is that employees and employers have their own set of contribution limits. So as an employee, you can contribute up to a certain amount, and as an employer, you can contribute up to a certain amount. But when you combine those two, that amount often becomes higher than other plans that are available to you. So if you're somebody who really wants to fast track or catch up on your retirement savings, this can be a really great tool for you. Finally, the S Corp has something that's called an accountable plan, which is essentially an agreement that you, the employer, make with yourself, the employee, to reimburse you for personal expenses. These are going to be things like the use of your home office, the use of your car, the use of your personal cell phone, right? All of these tax deductions that you are probably enjoying right now as a self-employed person, you still get to use as an S Corp. And what will happen with the accountable plan is that your business will send you a cash reimbursement. So it's tax-free, it's a reimbursement, not a fringe benefit, a cash reimbursement for those expenses. Okay, so let's talk a little bit more about getting money for you, the owner, out of your S Corp, because I did say a couple slides ago that your salary is not how much you need to live off of. It's a tax strategy, and you're probably thinking, well, great, but then what do? I just have to live off of less than I'm used to living off of. So how do you, the owner, get paid from your S Corp? We already talked about the salary. You as an owner can take distributions from your S Corp anytime you want. These are just transfers from your business account to your personal account. What is very common for S Corp owners to do is to have their payroll go out on one day. So let's say you need this much money and your payroll covers this much money because you've based it on a tax strategy, not what you need. And then to also have a distribution automatically go out that day that makes up the difference. I was an S Corp for many years when I owned my business, and this is what I did, and this is a very common practice. So that is how you supplement what you need to live off of, but still get those tax savings benefits of the S Corp. And then finally, the last way that you can get money out of your S Corp is those reimbursed expenses I just talked about with the accountable plan. Your S Corp is going to pay you cash every month for these expenses, and then it's going to write that reimbursement off for the business. But what's nice for you is that you're getting cash out of your business every month. And if you live in a high cost of living area, like I did in the Bay Area, that is a lot of money that can be coming back into your pocket that's tax-free. Okay, so let's talk about the differences between an LLC and an S Corp. And remember, we're using more conversational language here, but an S Corp is still an LLC. It is just an LLC that is taxed as an S Corp. And the LLC in this example is an LLC that is not taxed as an S Corp. So both the LLC and the LLC taxed as an S Corp, or the S Corp as we're going to say, have that legal shield between your business and personal assets. You don't lose that liability protection with the S Corp because you are simply changing your tax treatment, not your underlying legal structure. With both of these, those business profits are going to pass through to the owner. You are avoiding double taxation that we often find in a more traditional C Corp tax structure. Only the LLC that's not taxed as an S Corp is going to pay self-employment tax on its profits. An LLC taxed as an S Corp does not pay self-employment tax on its profits. You have income tax with both. We can't make that one go away. That one is here to stay. Only an LLC taxed as an S Corp can have the owners pay themselves employee wages, but in both tax structures, you can pay yourself through draws or distributions. It's called a draw. When you are an LLC without the S Corp tax election, it is called a distribution. When you are an S Corp, it's different words for the same thing, taking money out of your business personally. And the last thing that is different from being an LLC that's taxed in the default tax structure versus an LLC taxed as an S Corp is that the business is going to file its own tax return. Okay, so the moment you all have been waiting for, which one of these is best for you? And how do you know when you should turn your LLC into an S Corp or elect to be taxed as an S Corp, or even, like start thinking about it? So an LLC with a default tax structure is best for those who are new to business with very little earnings. If you are earning less than $60,000 in profit per year, you are not going to feel the benefits of the S Corp as much as you're going to feel the complexities of owning and maintaining one of these. So this is collectives guidance. This is not an IRS guideline. But we have worked with thousands upon thousands upon thousands of S Corp owners. And what we find is at that $60,000 in profit, remember that's after expenses, threshold, the tax savings become significant enough to outweigh the additional accounting and tax complexity that an S Corp is going to bring into your business life. So this is where we say $60,000 is really that threshold where you want to start seriously considering S Corp taxation. An LLC is also best for those who just want a simple, straightforward tax structure. If you're listening to this and you're like, I have to run payroll for myself and now I have another tax return, and you're like, I don't want to deal with any of this. Well, then an LLC is probably going to be better for you because it's more simple. So the S Corp tax election is better for those who are earning more than $60,000 in profit per year. Again, this is where you want to start seriously considering it and running the numbers. We'll tell you how later. And if this is going to be beneficial for your business. It's also best for those who want to maximize their retirement savings. If you're like me and I was self-employed for a long time and never saved for retirement and you need to catch up, this tax structure can help you do that. And then finally, you do need to have enough cash flow to make regular payroll runs. It doesn't mean that you can't skip a month. It doesn't mean that you can't adjust your payroll throughout the year. But what it does mean is that you do need to run payroll consistently. You do not want to be in a situation where you get to December, you have not run any payroll in your business for yourself. And remember, you have to do this to be compliant. You get to the end of the year and suddenly you're on the hook for a $60,000 payroll run. Well, do you have that much cash laying around, right? So you want to think about your cash flow as well. Okay, so let's talk about how to start and operate the S Corp. So if this is sounding pretty good to you, let's talk about how to make it happen. So first, you got to set this baby up. And you must have an LLC or other legal structure like a corporation in order to have S Corp tax treatment. So if you are a sole proprietor, you cannot go to the IRS and ask them to set you up to change your tax structure. You don't have that right. Basically, you don't have the right of tax flexibility. Only an LLC does. So you got to create that LLC, and that's going to start by filing your articles of organization, usually with your Secretary of State, and file any other state required paperwork. Remember, LLCs are set up under the state. So every state's process is going to differ slightly. And then you'll also want to put an LLC operating agreement in place. Next is the S election. So this is where you're going to ask the IRS to tax your LLC as an S Corp. Before you do that, you must obtain an employer identification number or an EIN from the IRS. Then you are going to file the paperwork, right, to ask the IRS to tax your LLC as the S Corp. And then finally, you're going to need to register yourself for a payroll account because you are now going to become an employer. And believe it or not, a lot of people miss this step and they forget about the work that's involved with actually getting themselves set up as an employer. The next step is you're going to set up your tools. You need a real bookkeeping solution. A spreadsheet and shoebox full of receipts are not going to cut it when you're an S Corp. There is more accounting complexity now in your life. You have to think about your payroll deductions. If you're doing retirement contributions, you're going to have to capture those, your accountable plan. You will need some sort of bookkeeping solution. And then also you'll want to invest in payroll software. I get asked in pretty much every webinar I do if you can DIY your payroll. Can you DIY it? Yes, you do not. There's no requirement by law that you have to use payroll software. Should you DIY it is a different story. Payroll is very complex. There's a lot of math, calculations, and tax tables involved when you're doing manual payroll. Also, when you have payroll, when you're running payroll for yourself, you have to file quarterly payroll returns with different agencies. You have to send the money that you withhold to different agencies. There's a lot of stuff to keep up with. Payroll software automates all of this for you. It is so worth the cost to just use a payroll tool than to try to spend many frustrating of hours dealing with your own payroll. So invest in payroll software. We love Gusto or Collective. All of our memberships include payroll too. We'll talk about that more at the end. And finally, you want to set up your money flow. So you want to be sure that your business bank account is under your LLC and your EIN. So you want to really create that separation between you and your business. The same is true with your business credit card. And finally, if you are transitioning from a sole proprietorship, you need to do that work of shifting everything over. So this is what the setup process looks like. Let's talk about what it looks like on an ongoing basis to maintain the S Corp from a compliance point of view. Well, you're going to need to file your business and personal tax returns. So remember, the S Corp has its own business tax return that you will now be responsible for every year on a federal and state level in most cases. You also need to take care of those payroll returns. Again, why we love payroll software. You're going to also need to maintain that underlying entity, your legal structure, the LLC, which means you'll have to comply with your state's paperwork filing requirements. They may be annual, they may be every other year. Again, every state is different. You may have to pay annual or biennial fees. And you also need to keep up with your books and tax obligations. So you want to ensure that you are doing your bookkeeping monthly. Again, more complexity. There's just more to do. And so you want to ensure that you're actually keeping up with it, because it's really hard to catch up at the end of the year. And S Corp owners are also responsible for estimated taxes that you pay quarterly. This is on your projected profit. So you still need to pay your quarterly taxes to your federal government and your state government. So this is what it looks like to run an S Corp. Now, we're going to run another poll. Sarah's going to launch another poll. And I want to hear from the folks here. Are you thinking about switching to an S Corp? I'm going to drink a little bit more tea, give my voice a rest, and let's hear from you. Are you thinking about switching to an S Corp? All right, let's close out this poll and see what the people have to say. 36% of you say yes, I'm in. 36 say not just yet, and 29% say I'm still not sure. So if you're in, I'm going to talk about how Collective can help you and make this so easy on your day-to-day life, so you don't even have to worry about all of that stuff. You can just focus on your business. If you're saying not just yet, that is great. You should be making intentional decisions about your tax structure in your business and not just waiting around and being stagnant in what you think is the right structure, right? Like, it's good to be intentional about these things and revisit this every single year and think every year, is it time? Is it time? Is it time? And for those of you who aren't sure, I'm going to share a free resource to help you see if it is a good fit for your business. So let's talk about how Collective can help. This is what it's like on your own without Collective. So this looks like what I showed you earlier, but slightly different, because we have S Corp specific things now. You have to do your S Corp setup, your S Corp tax return. You have to have that payroll software now. Think about your accountable plan. And of course, calculating that reasonable compensation, because that is a what? Tax strategy. This is your S Corp finances with Collective. Here at Collective, we specialize in S Corps. And we not only specialize in S Corps, we specialize in S Corps for solopreneurs. Because let's be honest, what somebody needs from a tax and accounting standpoint that has 20 employees is very different than a solopreneur. So I always call us, we are the S Corp people. We know how to do S Corp bookkeeping, S Corp accounting, S Corp reasonable compensation. We have tools to make your accountable plan super easy. We have embedded payroll, right? We have all of these tools in our platform that are made to make running your S Corp effortless, but you also have a team of financial pros. It's basically like having your own finance department. You have a team of financial pros who are doing the heavy lifting and all the numbers work for your business. Collective is available nationwide, including Washington, D.C. So if you live in the United States, we can support you. We work with sole proprietors. So if you don't have an LLC yet, we can get one set up for you. We'll do that work. We work with single member LLCs. So if you're an existing LLC, we will also support you in getting your S Corp, your LLC taxes and S Corp. And we also support LLCs who are already filing as an S Corp. We get a lot of these. Somebody told you to set up your LLC as an S Corp with an S Corp tax treatment. And you come to this webinar and you're like, wow, I'm not doing any of this. Please help. We can help you. We do work with people who are exclusively earning $60,000 or more in self-employed profits. This is not an everybody gets an S Corp situation. We want to be sure that it is the right tax strategy and structure for your business. And so we want to make sure that it's going to be beneficial to you in your business, which is why we have this threshold of that you do need to be earning $60,000 in self-employed profits. Okay, so let's talk about what we do. So with Collective, you are going to start by onboarding, and that is looking like setting up your LLC if you don't already have one. So all of that state paperwork and all of that legwork we're going to do, as well as filing for your S Corp tax election and all of the pieces that come along with that, like getting your operating agreement set up, obtaining your EIN. You also will get reasonable compensation guidance, which we talked about earlier. It's very important to get that guidance. Because Collective comes with monthly payroll, we will work with you to set up your bookkeeping and payroll tools to accurately reflect your business. We also come with bookkeeping and payroll tools. It's all inclusive, so we want to be sure those are set up correctly. We're going to register you as an employer in your state, and we're going to show you how it all works. Once you finish your onboarding, you are going to have ongoing monthly back office support. That means monthly bookkeeping. While our platform comes with a bookkeeping tool that you can go in and run your own financial reports, you can look to see what's coming and going out of your business account, you can attach receipts to transactions, we are going to do the hard stuff for you. We take care of the categorizations, the reconciliations, all the bookkeeping work that is probably taking you too much time and frustration to get done right now. We also do S Corp specific accounting. So like the accountable plans, dealing with the payroll deductions, all of those nuanced things. And we have tools to make your accountable plan super, super easy. It's one of our members' favorites. I've been interviewing members recently and everyone's like, I like the reimbursements tool. Like, great, I'm so glad. We send you compliance reminders for important state paperwork so you don't miss out on filing those annual or biennial returns with your state. And again, you have a team of financial experts you can message with questions at any time. So while we are a platform and we have this technology that can empower your business and also empower our team, there are still real life human beings who are working behind the scenes in your accounts and that you have access to for support when you need it. And then, of course, what would a company be like Collective be if we were not doing your taxes? So we take care of that S Corp business tax return on the federal and state level. And we also send you quarterly estimated tax calculations. So every quarter you get an email from us and something put in your dashboard that tells you what you need to pay in quarterly taxes. Collective costs just $349 a month, and this includes everything. There is no additional cost for the payroll tools that we provide. There's no additional cost for the bookkeeping tools. There's no additional cost for the tax returns. It's $349 a year, and there's a $199 onboarding fee. It includes everything, so we no hidden fees. I think a lot of people are. I get a lot of these Q&As later where people are like, but does it cost more for bookkeeping? Does it cost more for the taxes? Does it cost more to reach out to my support person? And it does not. All inclusive. And Collective is tax deductible. Okay, so we're about to do our really fun giveaway. So Sarah, maybe if you want to start preparing that, perhaps pulling out the name because we're going to do it in just a second. But before we do, and then we'll move on to our Q&A. But before we do, I want to invite all of you to schedule a free call with a tax advisor. So I mentioned earlier that if you are not sure if Collective is a good fit, this is a great option for you. This is a free 20-minute call with one of our tax advisors to talk you through your business, what exactly, is your business is at, and if an S Corp and Collective are a good fit for you. We also have a special offer, which is 1 month at 50% off for our Collective, for all of our webinar attendees. So if you are interested in Collective, if you're like, I want to start an S Corp, or you're like, I'm not sure, I need to talk to somebody, I just need to kind of like talk this through a bit more, really take us up on this offer. Again, it is a free 20-minute, 25-minute call. And we have our winner for our Collective giveaway time. It is Catherine Carter. Is Catherine here? I'm assuming she is. So Catherine, we are going to reach out to you in our, yay, Catherine, you won our $50 Amazon gift card. So we're going to reach out to you, Catherine, after the webinar and send that over to you. Thank you so much for staying till the end, and congratulations on the win. All right, friends, it's time for Q&A. Just a reminder, if you have put a question in the chat and not in the Q&A box, I will not be able to answer it. It's just really difficult to keep up with the chat Q&A. So please put your question in the Q&A. I'm going to answer a couple of the Collective specific questions, and then I'm going to go all the way back up to the top and answer those questions. So Joy said, would this all be set up in time for this year to be considered an S Corp if I signed up with Collective over the next week? Potentially, Joy. So what this, I say potentially because if you are an existing LLC, then the answer is yes. We'll just backdate your S Corp election to January 1st and you'll get the savings. If you are not an existing LLC, then it will depend on the state in which you reside and where you're setting up your LLC. So Joy, this is another great opportunity to talk with one of our tax advisors about where you live and your specific concerns. But even if you're not an LLC, and let's say you are like, okay, we can't, because of when your state will start your LLC, we're unable to get you set up through January, you are still going to have 11 months of tax savings. That's a lot of tax savings. When you break down that $15,000, that is more tax savings than it's not. Okay, Ash says, can I generate financial statements using Collective? You can. So we have a dashboard and we have a platform, and you will link your bank accounts, we will do your bookkeeping, and inside of that platform, you can self-serve your financial statements anytime. So you can customize the date, you can customize, the time periods. But yes, you can go in any time and you can generate your own financial statements. But again, we're doing the hard stuff. The financial statements are the fun things. We're doing the categorization, reconciliation, the hard things. Joy, also, what is the monthly or annual financial commitment? So just a reminder, oops, my keyboard slid down, so everything got weird. Okay, just a reminder, it's $349 a month, or if you join for the year and you pay annually, you'll save 15%, and that's about $3,500. Vanessa, can you send client bills through Collective? So Vanessa, yes, we have an invoicing product inside of our dashboard. It is in beta, but if you request it through your person you talk to, when you talk to your tax advisor, you can request access. And if you request access, you will have access to what we call Collective invoicing. It's really, really cool. You can send invoices, you can send quotes, and you can even set it up, connect it to Stripe, and take digital payments. So you can take credit card payments as well as ACH payments, and that's all in the dashboard itself. So again, one login does it all. SB, does the 50% off 1 month include the onboarding fee? It does not. It includes the first month, so it almost covers the full onboarding fee. Anonymous, is this service ongoing after the first year? Yes. You will, on an ongoing basis, receive all access to all the tools, the monthly bookkeeping, the capacity to run payroll, the estimated tax payments, and the business tax return. Joy, can financial and tax advisors with Collective help us make retirement options? We do have folks who, so when you are with Collective, you'll have eventually what's called a member relationship manager. This is going to be your, basically like your person that you connect with, your main point of contact, let's say. And all of our, what we call MRMs, they all have a financial background. So if this is something you need to talk with your MRM about, like, hey, what are, these are my options for retirement. Can you help me figure out which one would be the best, like from a contribution standpoint? They can help you with that. We don't offer retirement. So on our platform, it's not like you can create a retirement account, but we can help talk you through what your options are and some of the numbers you want to think about, like running, in order to decide which one's going to be the best fit for you. Okay. Just seeing if there's any other collective questions. And it doesn't look like there are. So I am going to go ahead and go back up to the top. I do see one. Lamia, is it possible to see a tour demo of the platform? It is possible. So when you talk with your tax advisor, they can walk you through the platform itself. They can show you what it looks like. Anonymous, do you have to start bookkeeping Jan 1st, or can you assist me in backdating these kind of books when I enroll with you? We do start in Jan 1st, but we do have a partner that we partner with, and we have a really juicy discount with them to help you if you need to backdate your book, if you need to backfill your books. We have somebody that we can refer you to, and you get a really nice discount being partnered with Collective. Ash, can I try for a few months? So this is not an annual contract. It's a month-to-month contract. So you could try for a few months. Of course, we would hope that you would stay with us longer, but you're not locked into like a, however long contract. Catherine, does Collective work with businesses that have W-2 employees in addition to the owner? So we don't. We only work with businesses that what we lovingly call business of one. Is $350 per month per LLC. What if you have multiple LLCs? So it's just per LLC. So basically, because each LLC will need its own set of books, its own set of payroll, its own set of everything. So it's per LLC. So if you have multiple LLCs, you can have multiple collective accounts. We do have members who have multiple collective accounts, but yes. Okay, I'm just making sure. If I sign up and then have to close the business or have to migrate out of Collective in a few years, how does it work? So we have a very detailed offboarding process where we will transfer all of your financial data back to you, as well as ownership of things like your payroll account, so you can retain that under your own name. So we do have a process for people who are closing their business or who, may decide to leave Collective for whatever reason, in order to transfer all your financial data and documents back to you. Okay, I think this was all the answers to your questions. So I'm going to go back up to the top and start answering just general questions for those who asked. Ryan, where did you get this information source from? Where can I learn more about corporate entity structures? Ryan, we have a blog that is full of so much information about this stuff. So I recommend, if you all are like, this was so interesting, I want to dig deep into more topics, to go to collective.com/blog or collective.com/guides. And there is tons of information. We have posts on LLC versus single member LLC versus multi-member LLC, S Corp versus C Corp, LLP versus LLC, or PLLC versus professional corporation versus LLC. We have a lot of entity specific information. Also, I encourage you all to join our YouTube channel. Sarah, maybe you can share the link in the chat. We also have a lot of great 3-minute videos that go into more entity-specific topics. Victoria, can you have multiple companies under one LLC? It is possible to have multiple companies under one LLC. That's what's called a holding company. And Sarah, we have an article. You're going to hear me say a lot of, we have an article on this, and we will share those resources with you. So Sarah, once you're done getting the YouTube link, if you could also grab the holding company article for Victoria, we can share that out as well. But yes, it is possible. It's called a holding company. There are pros and cons that this article goes over. So I encourage anyone who's wondering the same question to read through that article. Xavier, what is the tax bracket related to? Amount of earnings or activities? I'm foreign, but I need to understand the taxes in the United States. This is a great question. So the tax bracket is related to your filing status. So if you are single, filing jointly and married, if you're head of household, there's various filing statuses. And then it also relates to your level of income. Ryan, in the self-employment double taxation, is the employer paid side coming from my pay? So this is referring to the slide very, very early on, where we had the example of how you are paying your whole 15.3% versus being with being an employee somewhere where your employer is paying for it. So this is not what we consider double taxation. This is just the percentage of the tax that you are responsible for. Double taxation actually comes into play with a C Corp tax structure, where the business itself pays corporate taxes at the business level, and then the owners pay taxes on any money they take out of the business at the personal level. So you're paying taxes twice on essentially the same profits. So that's what double taxation is. Anonymous. As a sole proprietor, can I buy liability insurance? You can. And if you are a sole proprietor and you don't have business insurance, it's definitely something that could be very beneficial to protecting your assets. Melissa, can you share your thoughts on the Corporate Transparency Act? What do businesses need to do? So I think that you're talking about the FinCEN, as we lovingly call it here. Okay. This is sort of outside the scope of this webinar, but essentially you are going to need to register your LLC with the government to let them know that, you know, you exist as an LLC. Sarah, we actually have for our members an incredible help article to walk them through how to do this, including a demo of how to fill out the paperwork. So if you are a collective member, we will send you reminders about this. We have resources about this, but essentially, if you are a new LLC, you'll have to fill out this form on the government website within a certain number of days of starting your business. If you're an existing LLC, then you actually have through the end of the year to fill that out. Someone asked, will you address, Kevin asked, will you address an LLC tax as an S Corp? I believe I did go over that nuance here, but just as a reminder, it's always worth repeating. An S Corp is a tax structure. So when we talk about an S Corp, what we're really talking about is how your LLC is taxed. Gina, what is better for a small e-commerce as a side hustle? So Gina, it's really going to depend on how much self-employed profit you're earning. That's going to be the deciding factor. It's not really an industry question or an industry specific question. Oh, thank you so much, Sarah, for finding that that BOI reporting information. That's super helpful. And if you have a chance to find the holding company one, that would be good too. So it's less about like what your industry is and more about what your annual self-employed profit is. And remember, when we say profit, we mean after expenses. Carolina, can we get a copy of the slides to have the information? We do not send out the slides, but what we will send out is the recording, so you can watch this as many times as you need. Catherine, our winner. What is the income profit cutoff for deciding whether to choose an S Corp tax selection? We discussed this, but I'm always happy to repeat this information because I know there's so much information in these webinars. So $60,000 in annual self-employment profit. Yesenia, will we receive a copy? I answered that. You will. Okay, so Juan asks, can an S Corp or LLC treated as an S Corp own other LLCs to hold different businesses? So again, this goes back to this holding company question. So we are getting that article out here for you. It is possible to do this. It's called a holding company. I have to answer this one. There we go. So that one's in the chat for anyone that's wondering, can an LLC own other LLCs? The holding company article in the chat now. Maria, what would have been the minimum profit to have benefits and not paying taxes as an LLC of two owners? Okay, versus an LLC that have to pay taxes. So basically what Maria is asking about is like how this all applies to a multi-member LLC. And it is a bit trickier to give like a minimum profit range for a multi-member LLC because we really need to understand a bit more about your business and what role each of you play in the business, because that's going to help us determine like reasonable compensation. So I'm not going to give like a minimum profit because it's too complicated from like a tax standpoint to throw out a number that may not even be relevant to you. Maria, what I would say, and for anyone else here who has a multi-member LLC and is thinking of starting a multi-member LLC and is trying to understand the S Corp benefits, this is where you really want to get a tax professional involved because it is more complex from the tax savings calculation point of view. And you do want to talk to a professional about more of like the nuances of what each owner is doing in the business, because that again is going to impact the reasonable compensation expectations, which impacts tax savings. Okay, answer that the recording will be available. Ravi, can I have an LLC and have myself as an employee and tax is applied only on the employee payroll amount and payroll tax amount only on that profit? Can I have an LLC and have myself as an employee and tax is applied only on the employee payroll amount and payroll tax side? Yeah, so this is basically the S Corp structure. If you are an S Corp, this is essentially what's happening is that you are the employee and you are only paying that Social Security and Medicare taxes, which is that 15.3% we keep referencing on the payroll amount. And then there's only income tax on the profit. If you are an LLC without the S Corp election, you cannot have yourself as an employee. So that kind of makes the rest of the question a bit moot. Melissa, my husband has been a single member LLC for the past 8 years. Can he still request to be on S Corp? Yeah, you can request that anytime. Just know that how far back you can retroact that election is going to be the issue. So if you are an existing LLC, you can retroact your S Corp tax election 75 days. Now, for your husband, it's probably just going to make sense at this point in the year to retroact it to January 1st. So he has all of 2024 as the S Corp, but it isn't a situation where he could ask to be an S Corp for the last 8 years. But he can change his tax structure starting this year. Hi, can you please slow down? I'm sorry, I know it's a lot of information and there's such a small amount of time. This is why we send out the recording. So you do have the opportunity to watch this as many times as you want, because I do know that I go pretty fast to get through a lot of information and also 100 questions. Mario, I just started my LLC and have no idea how much profit I will have this coming year. Is it a good time to get taxed as an S Corp now or later? Mario, I would wait until you really understand how much profit you can expect, because you don't want to take on the complexities and the additional costs of an S Corp if you're not sure about how profitable your business is. If you are concerned about liability, though, you can still share, you can still set up the LLC. So you can do an LLC anytime, right? Because the only sort of like, I guess, drawback to that is the filing fees that you would have to pay in your state and any ongoing state fees. You know, in California, it's quite expensive. It's $800 a year, but in other states, it's $0 a year or $15 a year, right? So, you know, if you're concerned about it, you could just have the LLC. I do recommend if you know that you're going to want to go the S Corp route, having an LLC now just gives you more flexibility in order to retroact the S Corp in case you get like a really big contract. and you're like, oh, I'm going to be there, then you are able to retroact that S Corp tax status. Okay, I answered the questions about sharing the recording. Sarah, does an LLC not allow personal expenses for home office, mileage, and other expenses? An LLC does. So an LLC, you still can take the home office deduction, you can take the mileage deduction, and you can, write off things like business use of your personal cell phone, business use of your home internet, things like that. We bring up the accountable plan because a lot of people often get scared that they're going to lose those deductions, and they kind of want to know, like, well, if I do S Corp taxation, like this, how does that impact these deductions I already enjoy or am used to taking? So you don't lose those, you just take them in a different way. And frankly, I think the way that it works on the S Corp, having been both structures myself, I think it's a little bit more beneficial because as an LLC, you get to deduct these off of your taxes. So it will lower your tax bill. But as an S Corp, you actually get a cash reimbursement from your business, and the business is writing it off on the business tax return as well. So you're also lowering the taxes. It's like you get a little like bonus cash in a way. So that's the main difference, but you do have the option, if you qualify for those deductions, to take them. If you run out of money in your business, can you transfer money from personal to business account? You absolutely can. We just call that a shareholder contribution. I know you didn't touch on C Corp tax election. Is this because Collective doesn't do C Corp? That is correct. We do not support C Corp tax elections. I'm wondering when you may consider moving to a C Corp instead of an S Corp. I heard there's more flexibility in deductions and benefit structures, that C Corp's double taxation aspects might become less problematic. Anonymous, we have an awesome 3-minute YouTube video for you that goes over C Corp versus S Corp. Sarah, if you have a chance, you could put that in the chat. This would be a great resource for you to read. We also have an article that's linked in the description of that video that will go more in depth about C Corp taxation. Kyvan, of those reimbursed expenses, can you still write them off as expenses on your personal tax return if you've been reimbursed by the S Corp? You do not, because what happens is that instead of writing them off on the personal tax return, you're writing them off on the S Corp business return. So you still get a deduction. It's just that where the deduction goes. So it isn't like you lose the deduction. You just are no longer taking that deduction on the personal tax return. You take it on the business tax return. Stephanie, what happens if you do not make enough money to pay yourself your projected amount? I have so many questions and worries. Do not have worries. If you do not make enough money to pay yourself what you thought you're going to pay yourself, that's okay, because what matters is your annual salary. So let's say you start off the year, you think, I'm going to pay myself, throwing out numbers here, $5,000 a month, and you get about 3 months in and you're like, I can't do that. My profit's lower than I expected. As long as what you're paying yourself is reasonable for what you're earning in your business, what you do, where you live, all this stuff, but as long as it's in balance with what you're earning, it's okay. It isn't like you start the year having to sign something to the IRS being like, this is my salary that I commit to. That's not how it works. It's really at the end of the year looking back at how much did I earn, and did I pay myself enough in my owner wage for it to be reasonable for my earnings. So if your earnings go down throughout the year, your payroll can go down. If your earnings go up, you want your payroll to go up, right? You basically want your payroll to be adjusting with your earnings if you're having unexpected fluctuations. SB, I've heard 40K in profit is when you should start considering, as long as you're maximizing your deductions. There is some, so yes, people say different things. Because of the cost of business tax returns, which can be extremely expensive. When I was an S Corp, just my business tax return, not anything else, was $1,500. We go up to 60 because there's a lot of additional costs that at 40, you would have some tax savings. It's not that you wouldn't have tax savings. You would have tax savings, but are those savings going to offset the cost of all of the things you'll need to pay for with the S Corp? It's not a question of if there's savings, it's if the savings are worth the extra cost. Emily, do you recommend switching from an LLC to S Corp or starting with the structures for your business to be successful rather than learning both strategies? I recommend starting with, if you're not earning $60,000 in profit, I recommend just doing the LLC for now and just knowing that the S Corp is an option. You don't have to know every single in and out detail of an S Corp. You don't have to be able to recite back half of this webinar in any sort of way. But what I do think is important is, even if you're not ready for it, to just know that it's there for you and to reassess every 6 to 12 months, to take a mid-year check-in. Am I earning enough to really need to think more and do more research into this? No? Okay, fine. 12 months, next year. Am I earning enough? Maybe I need to get a bit deeper. So that would be my recommendation. Lamia, is a 60K guidance, is it the same across states, specifically to high tax states like California or New York? Yes, it is the same across states. I live in California. Actually, a lot of our members are in California and New York. Actually, we have a lot of members in California and New York, and we give the same guidance as well. With New York, it depends a little bit on where you live, because New York City has an additional tax, because none of these states like to make life easy for us. But generally speaking, yeah. And Lamia, if you're very concerned about New York taxes, California doesn't tend to have that much additional tax. But with New York, if you are concerned about those additional taxes, this is where a talk with a tax advisor can be really beneficial. Can an S Corp, this is from Catherine, an S Corp have other W-2 employees besides the owner? Yes, it can. Yeah. Ash, are all single member LLCs called sole proprietorships? No, but all single member LLCs by default are taxed as sole proprietorships. So if you are a single member LLC and you have not asked for any change to your tax treatment, you are by default taxed as a sole proprietorship. Melissa, does it make sense to set up an LLC if clients can only pay on 1099? Yeah, because they'll just 1099 your LLC, which you can do. And then if you are an S Corp, your clients are actually not technically required. So if you're an LLC taxed as an S Corp, your clients are not technically required to send you a 1099. Okay, we talked about the recording. We're going to send it out within 24 hours. If we are a startup in less than 60K and LLC I think it's supposed to be, is LLC the best route? If you want that liability protection that the LLC gives you, then yes, it's a simple, straightforward legal structure to set up. It's very easy to set up. It's easy to maintain while still having a lot of flexibility. Melissa, do you need to have an EIN to set up an LLC? Yes, you want to have an EIN because you don't want your LLC attached to your social security number. What you're trying to do with the LLC is you're really trying to create as much separation between you and the entity as possible. And the reason for this is because this is what comes up in court cases when people are trying to pierce that legal shield. So you want your LLC to have its own tax identification number, which is the EIN. You don't want your social security number attached. This is also why you want your business bank account, why you want your credit card to all be under the LLC, because what you're really doing through these practices is establishing a separation between the personal you, which is going to strengthen that liability protection that you get. Kim, if we are currently a sole proprietor, can it just be changed over to LLC? Yes. You have to go through the formal process of organizing your business with your state. So you have to go through the formal process that your state outlines for forming the LLC. But yes, you can definitely move your business into being an LLC. Rod, okay, Rod, yes, you will have access to the recording. Is active and passive makes any difference in S Corp selection? I think you're referring to revenue. I think you're referring to having active or passive revenue in this question. That's going to be my assumption. Yes, because what you want to be thinking about with active versus passive revenue is how that impacts the owner employee's reasonable compensation, because that's part of the facts and circumstances argument is it has something. So part of the facts and circumstance is how much of your time goes into revenue generating activities in the business. So if you are like a consultant who is actively consulting all the time, more of your time is generating revenue in the business. If this is a passive revenue situation, then less of your time is going into the business, which is going to change some of the reasonable compensation standards. So yes, it makes a difference, but not as much as it's not like active yes, passive no. It's not like that. It's more around like the nuances of how you would think about things like reasonable compensation. Um what are the differences between 1099 and S Corp? Can a new business owner start with a 1099 and then work on getting S Corp establishment? So yes, if you are a new business owner and you are just getting people are just sending you 1099s, you are a sole proprietor. You're still called a sole proprietor. The 1099 is simply a document that is reporting to you and the government what somebody paid to you. But your classification is a sole proprietor. And then, yes, you can work your way up. You can say, I'm going to be a sole proprietor for the next 6 months. Then I want liability protection. So I'm going to start an LLC and maybe I'm going to be an LLC for the next year. And then I want the tax benefits of an S Corp because I'm making more money. I'm going to elect to be taxed as an S Corp. You can certainly do it in a stepwise way. You do not have to do it all at once. Catherine, I think I answered this question, but I'll answer it again. Does collective work with businesses that have a few employees in addition to the owner? And the answer is we do not. Michelle, what about having a couple of employees? I think I answered this, but I'll answer it again. In terms of being an S Corp, you can have additional employees other than yourself. There's no rule that's like an S Corp can only have one employee and it's you. You can have other employees. Michelle, another question. If I have partners who have their own LLC, should we combine as a new LLC and S Corp? This is definitely a question that you need to talk with a tax professional and maybe even like a legal professional about, because this is, obviously like gets into so many nuances of like your business, how you want to run your business, how you would be most beneficial to structure an operating agreement to cover all of you. So I can't really answer this. My answer to this is that you could do it. You really need to sit down together and with like a legal or tax professional to talk through the pros and cons of it based on your business structure. Emily, is everyone at Collective as cool and capable of explaining this with as much clarity as you are? Emily, honestly, yes. Like we have amazing people. We host member webinars as well. We hosted one for tax season, and yes, it truly like we just hire folks who have incredible backgrounds in all of this stuff, deeper backgrounds than I have, frankly. Incredible backgrounds, but really have the skill of explaining things and leading with like empathy in the sense that like we know that you all don't know this stuff and like you really don't need to know all of it either because you have to focus on running your business. But if you have questions, we want to answer you, but with that empathy of like, hey, it's okay that you don't know it. Like it is a lot. It's confusing. So the answer is yes. Simo, can you set up an S Corp if you have employees and you do not pay yourself? So you can set up an S Corp if you have employees, but you do need to pay yourself. That is the rule the IRS has for S Corps. To be in compliance as an S Corp, you need to pay yourself, the owner, a reasonable compensation. The only time that rule does not apply is if your business is not making any profit. So if your business is profitable, which I hope all of you have profitable businesses, then you need to pay yourself. SB, what type of support do you provide for digital nomads, if at all? My business and residence are in the US. I have an online product service business, but I do travel work as I travel internationally a lot. So SB, there are cases where we support digital nomads and it's kind of like the same support because your business is going to need tax and accounting support no matter where you are living or working. So we can support you. It's just the support's the same, right? Like you're gonna have to have your bookkeeping done. If you're an S Corp, you need to run your payroll. You're still gonna have to, if your business is based in the United States, they still want your tax money, right? You still have to pay those quarterly taxes. So The support is largely the same because what you are required to do for your business is largely the same. Mariah, if you opt to be taxed as an S Corp, can you ever go back to before? Yes. So you can change your tax structure back to your default tax structure, but you can't do it all the time. So you cannot like every year be like, well, S Corp is better this year. Next year, being taxed as sole proprietorship is better, but then I like S Corp again. You can only do it once every 5 years. So can you go back? Yes. But it isn't a like flip flop because you feel like it. It's a situation where, let's say you have your business and then you go off and you get like a different job and you want to maintain your business, but not at the same levels that you were. And it's much more simplified. So maybe that would be a situation where you're like, I don't want to close my business, but I don't really need the S Corp tax structure anymore. That would be a type of change you could look into, but not a change like every year I want something different. Jacelyn, can you set up an LLC for a 1099 independent contractor income? I did address this question, but the answer is yes, because as an independent contractor, what you really are classified as is a sole proprietor. And yes, you can set up an LLC for that. Stephanie asks, can you set up an S Corp without designating a president, VP, secretary, etc.? Yes. Because you're, especially in the situations we're talking about, you're one person, so you don't need to make all those designations. Talks about the recording being available. How does an S Corp work with 4 different LLCs? This goes back to this idea of a holding company. So you could have each LLC be its own LLC standalone with the S Corp tax election, or you could have a holding company, which scroll back up in the chat, we have an article about. You can have a holding company that will hold all of those LLCs, and that holding company can elect to be taxed as an S Corp. Again, there are pros and cons to either option. That article does a really good job of going into that and some of the things you want to think about with holding companies. Can I use my single S Corp for multiple business ventures? It depends, Taisha, sorry, I couldn't read the name for a minute. It depends. So if your multiple business ventures are all under the same business activity code, yes. If they are radically different, then no. So let's say that you are a dog walker and an interior designer. You cannot have those under the same LLC. Those are radically different. Let's say you are an interior designer who is also doing like different types of design services, or maybe you have like an online course on design or things like that, then the answer is yes. So it really is going to depend on like how adjacent these activities are. If Xavier or Javier, if there's no owner payment involved, does it make a difference to operate as an S Corp? It only, so really, again, we want to look at your profit. So you want to be looking at how much money you're earning in profit. That's really that's the decision point for you, is am I going to have tax savings? So I would be looking at that, not like if I'm doing this or if I'm not doing this. Misam, there's a tax deduction called QBI, qualified business income for self-employed folks, up to 20% of profit. Does it apply for S Corp, or is there similar for the S Corp? So yes, there is. So S Corp still qualify for the qualified business income deduction, or QBI. We actually have an article about S Corps and QBI. So maybe Sarah, if you could put that in the chat. So the main thing to know about S Corps and QBIs is because of all of these additional tax deductions, it is going to lower your profit, which means it's going to lower this tax deduction slightly. That said, generally speaking, the tax savings that you're getting from the S Corp are going to much more offset the slightly lower QBI you receive. But yes, you are still eligible for the QBI deduction. What would the ratio of reasonable salary? Tax professionals don't give me advice. Your ratio was 61-60, 30%. Could it be reasonable salary? What happens if the IRS says my salary for last year is not reasonable salary? Penalty. So the salary ratio that we gave is what we still consider a safe ratio. There again, there is no percentages, and we don't give percentages. And a lot of times, if you Google this stuff, you'll start to hear about something called the 60-40 rule for S corps. We don't really subscribe to that. We really are looking at facts and circumstances. That's what you want to be considering. So, like, could this be reasonable that what we gave? Yeah, it could be reasonable. Absolutely. What is not reasonable is going to be a situation. Let's say this person was making 160K in profit and they paid themselves $5,000. That's not reasonable. There is no way that you are reasonably only earning $5,000. But I think where people get tripped up is that some of the guidance is around what someone in your similar industry would be paid if they were an employee. And so you might say, well, comparable, when I was an employee, I made $120,000 a year. So doesn't that mean I should pay myself 120 of my 160? But that's also too high, because then you're not really leaving money left over to invest in your business, right? So reasonable, the reason you're probably not getting a ton of advice around this is that it's complicated, to be honest. Like, it's just really complicated. There's a lot of nuance involved, and it's a lot about your unique situation. We do have a YouTube video on it, though, that goes a bit more into some of the other considerations that you want to think about with reasonable compensation. So, Sarah, if you have a chance, if you could put the S Corp salary YouTube video in the chat, that would be awesome. Can I incorporate my name as a DBA in my LLC? Yes, you can DBA with your LLC. Olivia says, is there a legal requirement to pay yourself salary from S Corp if the S Corp profits are really low in the first year? So no. So if this, again, this gets back into reasonable, if you are not profitable in the first year, you do not need to pay yourself a salary, because it's not reasonable to assume any business is going to be doing that. What's really low? Is really low 30,000? Well, you're probably gonna need to pay yourself something. Is really low 2,000? Probably not, right? So really low, it's like, what is really low? But if you are, like, especially if you're not profitable, if you have a loss, then you're not going to be expected to pay yourself. And I see that YouTube video in the chat, so thank you, Sarah. Zuza, what about being S Corp but not an LLC? So an S Corp is a tax election. So if you are an S Corp, you are either an LLC or a corporation. So corporations is another type of legal structure that can elect to be taxed as an S Corp. So you could be an S Corp without being an LLC, but you would be a corporation taxed as an S Corp versus an LLC taxed as an S Corp. There's no just being an S Corp, because an S Corp is not a legal structure. It is a tax election for a legal structure. What kind of expenses can be expenses for an S Corp? Okay, so basically all of your standard business expenses that you are probably used to taking right now are going to be expenses for the S Corp. The new ones that are going to come up are going to be your salary, half of your payroll taxes, employer contributions to your retirement accounts, the cost of payroll software, the cost of bookkeeping software, obviously the accountable plan reimbursements. So those get expensed in the S Corp. So like a reimbursement for the use of your home office would go on the S Corp books as employee office expense. Yeah, those are the ones that come to mind that are specific to S Corps, because there's a whole world of tax deductions that you are probably taking right now that you're going to just continue to take as the S Corp tax structure. So that doesn't change. It doesn't take away from your deductions. If anything, it adds to your deductions. Srini, we have a multi-member LLC me and my wife set up a couple years ago. Can I still file as S Corp taxable for last year? No. The reason being that you didn't run payroll last year for the two of you. So like, to be able to go back and do that and run the payroll that you would need to do would be very difficult. And we're also, it's January 31st. Like, W-2s are due today. 1099s are due today. Like, payroll return, like, there's a lot of stuff that's due today in this world, and you should have received a W-2 from your company. So I would say no. And like, I wouldn't focus on that. I would focus on how you get yourself set up this year. Anonymous, if you're not making any income yet, haven't launched, is it too soon to set up an S Corp? Taxes scare me and I've been hesitating starting. Feel you, taxes are scary. Yes, it is not time for an S Corp. Wait till you earn $60,000 in self-employment profit. Someone again is asking about backdating to the previous year. So I already answered that question. Really focus your energy on this year. The hoops you would have to jump through, the cost, the cash flow you'd have to have around, and like the amount of appealing you'd have to do to the IRS to get this thing through is like not going to be worth it. I think someone's asking about if Collective would be filing personal taxes as well. We do not file personal taxes. We only focus on the business side of your business. But we do have a partner that if you need somebody to file your personal taxes, we have a partner that we partner with who has again, like a very juicy discount for Collective members. Omega. If you are an existing S Corp and want to start with Collective for tax year 2023, is this possible? So I already answered this question. Even for existing S Corps, no. I mean, you can start with Collective for this tax year, absolutely. Like you could start, but if you're asking if we could do your business tax return for 2023, unfortunately not. The cutoff date to join Collective for that is December 31st. So after the year ends, that's the last day to have that prior year tax return filed. Another question about 2023 taxes. We do not do that. We have a fantastic partner that we work with, and as a Collective member, you get a very nice discount with them. So if you join Collective and you're like, I need someone to help me with my taxes, we can give you the resource with the price break to do that. Anonymous, is tax planning included? So I would say that like it depends on what you mean by tax planning. So if you're talking about the type of tax planning that runs into like personal finance territory, no, because we again are not focused on your personal finances. We're not focused on your investments. We're not focused on things like that. And that's usually what tax planning is more involved with, is like the personal side. If you're talking about the business side, like tax planning, like, hey, like, are these really deductions for my business? Am I getting, like, can I be writing these types of things off? That type of thing, then the answer is yes. So it kind of depends on how you define that. Vanessa, if no LLC set up yet, will California allow you to set it up now to Jan 1st? Vanessa, I don't know the answer to that question. So that's something I would advise you to look on the California website, because what's tricky with LLC setup is every state's different. And so every state just has a different process. And it's something that can be hard for us to, like, I don't have all the state processes memorized. There's probably someone at Collective who does, honestly, because we have people who specialize in like the nuances of every state's formation, but it's not me. So I would recommend that you look at the California state website about this. Okay, Santoshi, can we open an LLC now and convert to an S Corp at a later point? Yes, you can. $60,000 in annual self-employed profit is the criteria. AJ, when you register with the state and IRS for LLC and EIN, do you list yourself, Collective, as the registered agent, as keep entity ownership anonymous? Okay, so we do have registered agent that we work with that will be the registered agent. But your LLC, like your LLC name, will need to be listed as, because Collective isn't a shell LLC for you. We are setting up the LLC on your behalf. So your LLC name will need to be listed, but not as a registered. You can have a different registered agent, but still it won't be Collective on the state listed in like the state database. It'll be your actual LLC, because your LLC is going to have its own state number and its own federal number. It's its own entity. We just do the legwork of setting it up. Teresa, what is the difference of an LLC and Inc? An Inc is a corporation. So an LLC, it's two types of legal structures: LLC, corporation. And if you don't know which one you are, this is a great hack. Look at the end of your name on your formation documents. Does it say LLC? You're an LLC. If it does it say Inc., you are a corporation. Does an Inc. have to apply to be taxed as an S Corp from the IRS? Yes. So an Inc., which is a corporation, by default, also has its own default tax treatment, which is C corporation tax treatment. I know it's like so confusing because it's called a corporation, but then the tax treatment is called a C Corp. I know it's confusing, but this is where we're at. So if you don't want your corporation or your Inc. to be taxed as a C Corp, which is the default tax treatment, then you can apply to be taxed as an S Corp. Joy. So I have an LLC. I need to pay myself, but I'm not making the 60K amount yet. But if I heard correct, I can make personal distributions to my personal account. Yeah. So if you have an LLC and you're just like, I'm not doing the S Corp right now, but I do need to have some personal money to live off of from this business, you can absolutely take a draw out of your business account into your personal account. How are those taxed? The draws themselves do not incur additional tax because what is being taxed at the end of the year is the business profit that's passed through to you. So the draw is included in that business profit and that tax structure. But it isn't like a C Corp where if you take money out of your business, you pay capital gains tax on the money you took out. That's not how it works. The draw itself, you're just taking that, you're basically taking out your profits to yourself. And then at the end of the year, all of the profits get taxed, whether you took them out or not. Anonymous, as an S Corp, are you required to issue a 1099 to yourself or not necessarily? No. So as an S Corp, you're not going to issue a 1099 to yourself. You're going to issue a W-2 to yourself because you are an employee of your S Corp. So you get a W-2 at the end of the year, not a 1099. Angela, how long does it take to form an LLC without the S Corp? Depends on your state. So every state has their own timelines. It also depends on the time of year because seasonality matters. It's going to take a little bit longer this time of year because there are more people starting new businesses in the beginning of the year versus like in July. Anonymous, are you able to use point of sale on your platform or do you have to forward existing POS to the platform? So our platform does not have a point of sale system. However, the way that our platform works is you are going to connect your business bank account. And your point of sale system is, I'm assuming, processing cards for you, processing payments for you, and then depositing, settlements, basically payments into your account every day or whenever you have a sale. That is what's getting downloaded into the platform from your business bank account. So all the details of like, I sold 3 waters and 2 candles and a battery, that we're not going to have those details. That's going to live in your POS, but the actual income earned is going to automatically come into our platform. And then our bookkeepers are going to code that. Okay, then. Okay, I answered this question about the reimbursed expense. I answered this question about 2023. Aiden, is there an upper limit on the profit to take advantage of an S Corp? Yes. So if you are earning closer to like, I'd say $700,000 to $1 million in profit, right? We want to always remember we're talking about profit, not revenue, because they're different. You can have $1 million in revenue and earn $100,000 in profit, right? If you have so many expenses. But if you are earning somewhere between 700K up to $1 million, then the S Corp may not be a good fit for you and you want to look at a different tax structure. This is actually more where like a C Corp tax structure would be a better fit. And if you're earning that much, congratulations. Recording will be available. Vanessa, is it possible to refile taxes as LLC in previous years to amend as an S Corp? No. Melissa, I think I answered your questions because I'm just going down the line, so I'm fairly certain I answered them. Faye, what if I have my young kids on my payroll? Can we use collective? Okay, we have an article on this. So if we could put that in the chat. So we do not support having your children on payroll. And the reason is because it can increase the risk of audits for your S Corps. And there are some benefits that you're not going to get as an S Corp having your children on payroll. Because like typically when you have children on payroll, there are some tax benefits that you may enjoy, but with the S Corp tax treatment, you don't get those tax benefits. So just in general, it's not something that we support. And here's the article here in the chat about hiring your children. The whole first section of this article talks specifically about why this doesn't work for S Corps. And then after that, there's more details just about generally like how this works for other types of business structures. Evan, do you only work with single member LLCs, or can the LLC have multiple members? We do not work with multi-member LLCs. JT, how does the S Corp work with incorporate my name as a DBA? So it's not the S Corp, it's the LLC that you would be DBAing on. So you would just have your legal name that you set up your LLC as, and then you'd go through the process of having a DBA. And you know, there's different processes. Really, it's like states. I think it's based on state how you DBA, because the LLC is at the state level. So then the DBA is also happening at the state level. And for those of you who don't know, DBA is doing business as. It's basically the process of having like another name that you can use sort of like outwardly for your business that isn't the actual legal name. So you can DBA, but the S Corp isn't what's getting DBA'd. The LLC, the actual underlying legal structure, has Andy Smiles LLC as the LLC like official name, and then maybe I just want to DBA as Andy is a magical unicorn, right? Like that then is something that I can put on, you know, my invoices. Someone can write a check to that, and I'd still be able to cash it. So that's a bit about how the DBA works. I need to file 2023 tax returns. Will you file if I enroll today? No, we do not do 2023, but we have a partner that can help you. Okay, I answered this question. Joy. So I have an LLC. I need to pay myself, but I'm not making the 60K amount yet. Okay, I answered this question as well. Replay will be available. And also I see this in the chat of, are we going to do this again? We are going to do it again. Keep an eye on your email. Okay, can you comment on how the 60K differ from one state to another? Specifically, okay, I talked about that. Juan, and per my question, holding company, how is collective priced? So I think we talked about holding companies. Collective doesn't support holding companies. So if you want to do a holding company, we're not a good fit for you. If you are like, I don't want to do a holding company, I just want my LLC to be what it is, maybe I have 2 or 3 LLCs, then you're going to pay the collective membership fee for each LLC. Isabel, I have an LLC with my husband. Can I still use collective? It depends on where you live. If you have an LLC in a community property state, then yes, you can use collective, because in that state, the state will see the LLC as a single member LLC. If you live in a non-community property state, then the LLC will have to be a multi-member LLC, and we cannot support you. We actually have an article on this. We have an article about hiring your spouse into your LLC. Can we share that in the chat? That article lists out which states are community property states. Anonymous. How about if your spouse is W-2 and you file jointly and he makes closer to a 300K and you do as well? Will an S Corp still help? So if you, so there's something called the Social Security wage cap, which basically means that every year the government can only assess Social Security tax up to a certain amount of income you earn. And this is per individual, not couple. So your spouse, if he's making 300K, is probably like, he's already maxed that out. Now, if you are self-employed and making 300K, then the S Corp is definitely going to help you, even with the Social Security wage cap, because the wage cap is about, I think, 164,000 in 2024, but we're talking about your self-employed profits. If you have a W-2 job and are making 300K, and then you have this side hustle business, the S Corp might not help you, because at the end of the day, you are maxing out on that Social Security tax through your W-2 job. So I don't actually know enough about your situation to tell you, This is where a call with a tax advisor is really helpful because they can ask you these questions about what's actually going on in that. Can you set up an S Corp if you have employees and you do not pay myself? I already answered this question. Vanessa, does Collective send quarterly taxes on behalf of our business? We don't send them into the IRS for you, but we will calculate them for you. So you will get an email and something in your dashboard every month that's like, here's how much you need to pay. We remind you like the instructions, the due dates for your state, all of that good stuff. And then you go and pay, and you basically log that you made the payment in your dashboard, which helps us with future calculations. Rod, how soon would I be able to speak with somebody? I'm not sure about like exactly what our calendar availability is, but I am assuming like within this week. We usually have slots available. It is a busy season for us, but we do have slots available. Emily, how long will the discount code and free consultation call be available? The discount code is available for the next 3 months. The free consultation call is available to you at any time. So anytime you are ready to talk to us, please reach out. You can use this link, or you can just go to collective.com and click on that Get Started button. In relation to, okay, Melissa, in relation to my client paying 1099, meaning they only pay via my social and not my EIN. So if you are an LLC, you want to switch them over to paying the EIN, not the social security and the LLC name. That would be with the switch that you would make. So they would be essentially like they would get a new W-9 from you with your LLC name, your EIN, and that is what they would use to file the 1099. So it's pretty simple for them to do. It's not like a huge switch. They can still send those 1099s. Cutting edge. What are quarterly taxes? We have an article on this. I told you all, I was like, we're gonna like, you're gonna hear about a lot of articles because I'm the director of content and I know pretty much every piece of content we've ever published. What are quarterly taxes? Quarterly taxes are payments that you make towards your annual tax bill. Because when you are an employee and you are earning income, the IRS and the government is extracting money from your paycheck in real time. So as you earn money, you are essentially paying into your taxes. But when you're self-employed, that's not happening, right? You don't have this paycheck withholding situation. Even as an S Corp, there's still pass-through profit that you are not going to be, every 2 weeks paying tax on. So quarterly taxes are a system to enable you to basically pay part of your annual tax bill ahead of time. And it's actually a requirement for you as a business owner if you will owe more than $1,000 in taxes at the end of the year. Because basically the IRS doesn't want to wait for its money. It wants it now. So every quarter, you need to send these tax payments into the IRS, and these payments get applied to your annual tax bill. So if your annual tax bill is $15,000 at the end of the year, and you paid $12,000 in quarterly taxes throughout the year, then you will only actually owe at tax time $3,000. Cutting edge. How often can I run payroll to myself? As much as you want. Most people do it monthly or bi-monthly, but you can run weekly payroll as well. Tina, can I use Collective for just taxes and not get the monthly yearly account? No, we don't do a la carte services. We are really focused on our vision is that we are this like all-in-one platform for self-employed people, because it is a lot to manage like 4 or 5 different platforms, the QuickBooks of the world, the Gustos of the world, the LegalZooms of the world, your invoicing software, right? Like maybe your POS. So we want to be a one-stop shop for self-employed people. So we don't like parse out our services or do a la carte. Lamia, can Collective S Corp help me pay contractors through 1099? Yes. So our payroll software that is embedded in our platform, which is powered by Gusto, does enable you to pay your contractors 1099s. Pay your contractors through the software. And then what's really cool about it is at the end of the year, that software will auto-generate your 1099s for you. And that's all included in your Collective membership. Anna, coming in with the S Corp facts. When is the K1 due? So a K1 is the just to kind of give people understand what this question is about. When you're an S Corp, you file your business tax return. And part of what that business tax return generates is something called a K-1, which is going to report what the pass-through profits are from your business to you, the owner. So you're going to use the K-1 when you file your personal tax return. It's kind of like a W-2 where you get that W-2 about what you got paid in salary or, employee income. It's the same thing with the K-1. It's like, hey, this is what you're getting in pass-through profit. S Corp business tax returns are due March 15th. So they're due a month earlier than our personal taxes. And the point of that is to give you time to take these new documents like the K-1 and give it to your personal tax preparer or, TurboTax or whatever. So when is the K-1 due? There's not actually a due date on the K-1, but the business tax return itself is due on March 15th, unless you file an extension. Okay, JT. Operating as an S Corp, can you write off your home and vehicles? You can you can write those off, but that happens through the accountable plan that I discussed earlier. So it's not going to be the same way where they get where you're deducting them on your actual tax return. What's going to happen instead is that your business is going to reimburse you for those expenses. You tell your business every month, here's what I spent on X, Y, and Z, my home office, my car. It's going to reimburse you for that. And then the business itself takes that deduction. So you get the deduction still is there. It just shifts from the personal tax return to the business. Alex, can you bring up the table that breaks down the cost differences again? I think you're asking about this one. So I'm going to put this one up. Ginger, why would you need to backdate your S Corp election to Jan 1st if I elect to change now? So if you change now, you're going to just get that backdate. I'm talking about people who are changing further in the future. So if you were to change now and you're an existing LLC, then you would just have it start on the 1st and you get that whole year. But if you were to start your S Corp April 1st, let's say, and you're not backdating that S Corp tax election, then January, February, and March of this year you're not taxed as an S Corp. Okay, so that's where the backdating comes in. So let's move that timeline out even further. Let's say you were to start June 1st. And then you have almost half a year where you're not being taxed as an S Corp. And that's where you start losing tax savings. So this is where the idea of backdating comes in, of like, how far back can I extend this tax election for my business? Now, it's not as important right now because of the time of year we're in, but this becomes a much more important concept as we get more into like the mid-year. Anusha, are all LLC deductions allowed on S Corps? Yes. Basically, if they are deemed necessary and ordinary expenses, which is what the IRS definition of a tax deduction is, then you can write it off on your S Corp. Wow, oh wow, 119 questions answered. Wow, I can't believe 45 of you stuck around for an additional hour to go through these questions. Thank you all so much for being here, for engaging. It's so great when folks are engaging and asking questions. Really appreciate all of you taking the time today to learn about taxes. I hope that we will see all of you as collective members. If not now, sometime in the future. We're here for you when you're ready. And we are going to be sending out the replay. I know there is a lot of questions about this. You will receive the replay within the next 24 hours. So if you need to go back and listen to something, you want to review the questions again, stay tuned. Thank you all so much. Have a wonderful rest of your week. Bye.